We're live now, sir.
We start?
Yes, please.
Hi, good day. This is Sunil Subramaniam, Managing Director of Sundaram Mutual Fund. I'm here to talk to you about our new fund offer, the Sundaram FlexiCap Fund, which went live for subscription yesterday. The NFO will be open till the 30th of August. Let me give you a brief detail on the fund and its logic. So basically, as you may be aware, there are three kinds of market capitalization stocks in the stock market: large caps, mid caps, and small caps. Different forces drive the behavior of these cap curves. Large caps are largely large companies, and you find a significant proportion of the investment in them comes from foreign investors, known as FIIs or FPIs, as well as from large domestic investors. Mid caps and small caps, as defined by the regulator, are the stocks which start from 101 to 250 is called the mid cap space, and 251 and below is called the small cap space, right? Both mid and small caps are more sensitive to domestic economy growth and development, whereas large caps are largely neutralized to that and have ability to weather the storm. So as you can see from that, large cap tend to provide a safety from the inherent volatility of the stock markets, whereas mid and small cap provide you the growth opportunities when the Indian economy grows very well. So when you do your asset allocation within your equity, you always tend to wonder, how much should I take in large cap, mid cap, small cap, or is it a time to put 100% in large caps at this point in time? And there are multiple forces at play. There's liquidity from FIIs, there's the earnings growth of the economy, which translates into earnings for these companies. There's inflation, on the other hand, which both from imported items like oil and some food, and then domestic productivity. So it's quite a complicated matter in terms of which cap curve set of stocks tends to perform in which period. And one needs to be dynamically managing a portfolio of large, mid, and small if one truly wants to gain value from the stock markets. Mutual funds do this through both expertise and through diversification, which is available to single cap curve funds like a large cap fund or a mid cap fund. But by blending the three into one, the Flexi Cap is attempting to give you a one-stop solution where not only can you benefit by the growth of the Indian economy, you also get expert advice on how to keep the blend between large, mid, and small, and you get the ability to diversify across all the three, and at the same time keep changing these as a situation in the world economy and the Indian economy keeps changing. So that in essence is the thesis of the Flexi Cap Fund. And over a longer period of time, you will find that it will be able to balance between the cap curves and try and give you an optimal return. So naturally, there is risk in the stock market. So the fund will attempt to manage the risk and still deliver a reward based per unit of risk to you. So I would recommend this fund strongly to all kinds of investors, even to those who are first time entering the equity markets, who can take an allocation to this and experience how the fund manager manages the portfolio. With that being said in brief, I'll now leave the floor open for any questions. Thank you.
The first question, sir. Yeah. How are flexicap funds different from multicap funds?
So in multicap funds, before SEBI categorized multicap and flexicap as separate, multicap funds were like flexicap funds. But then SEBI brought in a new regulation wherever in multicap funds, you're required to keep minimum of 25% in small cap, 25% in mid cap, and 25% in large cap. So that takes care of 75% of the portfolio. The balance 25 can be allocated to any of the three. So in a multi-cap fund, you're definitely going to get an 25% exposure to each of the cap curves. Whereas the flexi-cap fund, depending on the situation, can even take down, say, to small caps to as low as 5 or 10%, or it could take large caps to as high as 80%. So the degree of flexibility available to the fund manager is far greater in a flexi-cap fund than in a multi-cap fund.
The next question, sir. What sectors is your fund going to focus on?
So this will be constantly varying. At the current point in time, we see that the domestic economy is on a strong growth footprint. And this is essentially driven by the investment cycle, where the government is spending heavily on capital expenditure. The government has also invited foreigners through the PLI scheme to invest in Indian factories and all of that, so that re-export can be done from India. So that will lead to capital expenditure. And the private sector also, because domestic capacity utilization has risen to 72% after dropping below 50 during the COVID, are trying to see that private companies are also trying to expand. So capital expenditure, that is investment, is one driver of the economy. And in this sector, we will take capital goods stock, building materials, cement, steel, and the like. It's one sector that we are positive and bullish. At the same time, the economy also is poised to bounce back after a COVID period in terms of pent-up demand on consumption. So discretionary consumption items like refrigerators, cars, auto, and housing, and high-end retail are also poised to show a strong growth. So the second strong sector to pick at this point would be discretionary consumption. And the third sector which we would be featuring in our portfolio in a significant way is the banking and financial services portfolio. The banking and financial services space is also poised because both the investment cycle as well as the consumption cycle need financing from banks. And as per capita income in India is starting to grow, you will find that savings in banks also tends to grow. So the banks will be supported both by having a better source of funds from the public as well as be able to lend the same to the category of investors, either corporates doing investments or individuals buying discretionary products. So these three will form the core part of our portfolio at this point in time.
The next question, sir. What will be your deployment strategy post allotment?
So the way we are looking at the overall scenario, the markets went through a significant period of correction because the fears around the inflation meant that the Fed was going to hike interest rates, the ECB was going to hike interest rates, as a result of which there was a fear of a recessionary scenario developing in the developed world. The hike in interest rates naturally also was accompanied by a rise in oil prices thanks to the Russia-Ukraine war that's going on. So India as an economy imports 85% of its oil. So any rise in oil prices was viewed with a negative outlook on India by FIIs. And hence we saw over a long period of time, over 6 months, we saw pull out of money from the Indian markets leading to volatility. Now what's happening is, now that the inflation is trying to be tamed through rate hikes, there is a view that the advanced economies will sooner or later slip into recession. But then when a recession happens, it has a negative impact on oil, and oil prices are affected to then fall down. So a decreasing oil price is a good for the Indian economy, and hence FII money should start flowing back. And you're already seeing from the 1st of July that FII money has re-entered our markets, giving the view that there's an oil-related recession coming through. So from that perspective, we believe that the Nifty PE ratio for 1 year forward corrected from the highs of 22 to about 17. So we believe that now with the return of the FIIs happening, it's a good time. We expect that over the next 3 to 6 months, as the recessionary fears get strengthened, you will see that oil will drop and more FII money will start coming into the Indian market. So there's a good time to actually buy into equities, right? In that view, the fund will also have a strategy given the sectors that it's choosing, wherever it sees a stock at a reasonable price, where its growth is factored at a reasonable price. That is GARP, growth at a reasonable price will be the mantra, and we will start deploying those immediately. So we don't propose to delay our deployment too much, because we believe that in the coming months, return of FII flows is going to take the market to newer highs over the next year or so. So the earlier the bird that catches the worm, the better the returns.
Our next question, sir. Are you also considering sectors like fintech or insurance for this fund? Any of these new age emerging players?
Absolutely. So if you see, the small cap and the mid cap component would largely be focused around the new age Indian economy stuff. So it's a key part of the 4 themes that we have in terms of the portfolio. So yes, new age themes like not just insurance, logistics, there are a whole lot of fintechs coming up. So we will evaluate all of those with a positive outlook, and we would tend to see that the small and mid cap portfolio will probably carry some amount of these new age stocks in their portfolio also.
What is the minimum investment in this fund, sir?
I think 100 rupees is all that you need to invest to make a beginning with this fund.
So how will you identify these stocks that will be a part of the portfolio?
So as part of our research process, we have a in-house process where we do what is known as an economy, industry, company framework, where we identify the growth sectors of the economy, and within that, which industries are likely to do well, and then pick the stocks. For picking the stocks from this set of frameworks, we have what is known as a six-pillar approach, which focuses on six different aspects, right from corporate governance to profitability to scalability to how they allocate their capital. All of those factors about a company are taken into account to make a judgment about what is the value of that company. And as long as the price trades below that value, we will go and buy that stock.
That was our last question, sir.
Thank you. Thank you very much. Like I said, this is an opportune time to invest into equity. It's an opportune time to use FlexiCap as a tool to invest into equity because we see short-term volatility and the return of FIs providing a decent level of protection and returns from large cap, whereas the economy story of India, driven by the twin pillars of investment and consumption, supported by the banking, will give a lot of play to the mid and small cap to create value. So a FlexiCap portfolio, which contains large, mid, and small, is an absolutely very good way to participate in the coming economic growth of India, which will play out through the equity markets and lead to significant wealth creation. I welcome your investment in this fund. Do consult with your distributors or advisors on how much you should allocate to the fund. And as I said before, the 30th of August is when the fund closes for subscription. So I would encourage you to make an investment before that time. We also have the ability through the ads in the newspaper to use the QR code. You can simply take your mobile phone, scan the QR code, and with a simple 3 or 4-step process, you can make your investment into the scheme. We have made a digital facilitation to an extreme high degree. So I would welcome all of you to participate and try and enjoy the fruits of the Indian growth story. Thank you. Happy investing and look forward to touching base with all of you again soon. Thank you. All the best.
Yes, sir.